Hello, and welcome to Bowl 76 Insiders Only meeting. Bowl 76 is an athletic shoe company managed by Rick Balanis, Sharika Charles, and Rachel Hernandez. I am Sharika Charles. In this presentation, the co-managers and I will provide you with an insight into our company's operations from years 11 through 17. Bowl 76's vision is to inspire while leading the shoe industry with our bold, innovative, yet customer-centric products. We are committed to adhering to our global business operations, social purposes, and core values to embark a sense of authenticity to our customers. Here at Bowl 76, we say, step out of your comfort zone and be bold. Our management's goal was to utilize our products to develop and implement a competitive yet successful strategy that can control the market from years 15 to 17. As you can see here from the charts on this slide, utilizing our identified approach ensured we could exceed the investors' expectations in the earnings per share, return on equity, and in stock price. Next, Rachel Hernandez will discuss our company's initial and final competitive strategy, as well as the money our company generated in further detail.
Hello, my name is Rachel Hernandez. I'm here to provide you with insight into our company's operation for our initial competitive strategy, final competitive strategy, and money generated. Our management's decision for our initial competitive strategy was to utilize a broad differentiation strategy to build our brand that is different from our competition rivals. The vision for our initial competitive strategy was to gain market share by pushing up quality of our footwear while remaining low in cost. Next, final competitive strategy. We focused on a good strategy and a good strategy execution, which increased our performance in the footwear market. Bowl 76 performance directly reflects the caliber of the strategy and the proficiency of the execution. Our final competitive strategy was employed by global best cost strategy to add more value for the money by providing 8.4-star footwear at the lowest price than other 7-star brands. As a team, we wanted our customers to get the best value for their money by focusing both on low cost and upscale difference. Our strategy allowed us to have a competitive advantage in the market by investing heavily in Six Sigma practicing and incorporating appealing attributes such as styling and quality at a low cost than rivals. Lastly, money generated. Bowl 76 trends in the year 13 to 15 were switched over to the revised strategy to increase profit margin by dropping the cost of production for our footwear. As you can see in the charts on this slide, it states net revenue, earnings per share, and stock price. We strived to have a high earnings per share to generate more earnings and more net income per share of stock. Our sustainable competitive advantages were economies of scale, having the distribution network, good financial standing, heavily investment in Six Sigma, and celebrity endorsement. Next, Rick Bolanos will discuss company's competition, competitive strategy, and lessons learned.
Thanks, Rachel. So here we can see the overall game scoreboard to finish off year 17. We were lucky enough to win in Industry 1, with our closest competitor to the game, Adidas, coming in second place. Strategically speaking, at the end of the game, the closest competitor we had was Hyperion in Industry 1, but theirs was not quite effective enough to really make a big difference in our results. As we look at the strategy employed by Adidas, throughout the game, they attempted to employ a high-quality, broad differentiation strategy, which meant they had a large, wide variety of shoes that were the highest quality in the game. This let them charge the highest premium for those shoes. Early on, this high cost proved to be fruitful for them as they took early rounds. However, as the quality of our shoes rose and the prices remained low, we were able to nip out enough market share to effectively surpass them and maintain our lead throughout the game. One of the ways that we worked on maintaining the competitive advantage that we established throughout the game was we concentrated highly on investing in Six Sigma practices. As we got to year 17, we had outspent every other company in Six Sigma practices, and this helped lead to us being able to produce the lowest cost when it came to dollars per star in the industry. In other words, for every star of quality, it cost us less than all of our competitors throughout the industry. This led to us being able to sell our 8.4 star shoe at $50, while the industry was working on a 7.5 star shoe at $62, almost $63. That was a 12% increase in quality while saving more than 20% across the board. That competitive advantage set us up to where we were able to sell more than double the industry average of shoes. In North America alone, we had 128% margin between us and the industry average when we sold over 6 million shoes there. The average worldwide turned into a 19.8% market share. We sold 21,836,000 shoes. This far surpassed the industry averages, and by keeping our quality so high with our prices so low, it allowed us to increase the demand so that we were not only able to sell more shoes, but we were able to produce more shoes, which again helped us lower the cost per shoe to maintain our margins despite our low prices. That allowed us to maintain the best bang for your buck, so to speak, with that best cost strategy that we ended the game with. If the game were to continue on this way, we would continue to maintain our economies of scale in production by outproducing the entire industry, and we would continue to drive down those costs of production so that we could raise the quality of our shoes while maintaining that low price to ensure the best value possible for our customers. Some of the things that we take away from this game is that the attention to detail is absolutely key. We realized midway through the game that there were better ways to be making our shoes in order to ensure that we were coming up with the best value for our customer. Another thing we learned was that we needed to be agile, we needed to be quick and flexible with our changes. Throughout the game, we almost employed an opportunistic approach, so to speak. We saw areas that were open and we went and attacked them. And it proved very fruitful for us as we were able to come away with the victory. The private label, I can't stress how much it felt like the overall industry ignored it. There were times we were able to almost sell 30% of the demand, and that turned into millions of dollars of revenue coming in for us. By the end of the game, our goal was to sell 25% of the demand across. It should have limited us down to around 16% based on the number of people in there, but because of the lack of supply, we were able to meet that 25% demand in all 4 continents. The exchange rates was something that should also not be ignored. As you build your economies of scale and you have production plants across the globe, you need to understand where it's better to ship from and to ship to in order to maximize the numbers the way you need them. Last but not least, we did feel that we could have done better. Despite winning, we think we could have jumped out to an earlier lead. We could have increased our numbers even further had we been willing to make even bolder decisions. And that's something that we would take away going into another run if we were to. Early on, you have to be prepared to be bold. And overall, that's how Bold 76 was able to take Industry 1. Thank you for your time, and I hope you enjoyed.